afternoon and good evening to all. Myself Vaibhav. In today's session of Visual JForex, we will be trying to complete the setup involving the indicator Butterworth. This is going to be third and the final session in this series. So let us get started for the day. This is the Visual JForex board developed by the Dukascopy Bank SA. In the last two sessions, the development so far includes the instrument subscription where the default instrument is EURUSD. Afterwards, the position amount was defined at 0. I have included these Butterworth indicator blocks with varying candle periods. First two are of 4 hours each, and these three are of 15 minutes each. To look at the price volatility, we are also taking the help of these get historical candles. Candle period is 15 minutes for these two and 10 seconds each here. And on the lower side, we have conditions in place for execution of the buy trade. So far, so good. The buy side is complete. Now, our job is to get the sell side equation in place and see what are the conditions which are required for the execution of the sell trade to happen. First, we have to consider the 4-hourly candle period. 4-hourly time period where we need the momentum to be on the bearish side. So this is going to provide us the trend for the underlying instrument from short to medium term perspective. When we are using the 4-hourly candle period, that is good enough for medium term also. For a sell trade to execute, we need the momentum to be bearish, and for that we are going to place a simple condition. The last 4 hours Butterworth output should be lower compared to the output one day back. So we are going to use the shift value of 1 and 6 respectively. So last block with the look back period of 1 will be compared to another Butterworth indicator block with the same parameters except for the look back period, which will be 6, and these two values will be compared, and the output for the last 4 hours should be lower compared to the Butterworth output one day back, 24 hours back. So that is the major requirement. And as you can observe from the chart, I have plotted this EURUSD chart of 4-hourly candle periods. This was the time starting from 15th of July, or you can say 14th of July, and extending till 27th of July. After that, this reversal started. So this was the time where we could have looked for the opportunities to go short. And now here also, maybe by the time we come back for trading tomorrow in European trading hours, we will have these conditions in place for execution of the sell trade. Okay, so let's shift our attention to the lower time frame of 15 minutes. On the 15 minutes, we need the turnaround to have happened recently, and by recently we are going to define the limit of 3 hours. In last 3 hours only the turnaround should have happened. Prior to that, the Butterworth indicator output on the lower candle period of 15 minutes needs to have been rising. So what we are going to do is take the last 15 minutes output value for the Butterworth indicator, compare it to the Butterworth output with the same parameters 3 hours back, and it should be lower compared to the output of the Butterworth indicator 3 hours back, which in turn should be higher compared to the Butterworth output 4 hours back. So that will give us this nice curve where we have first inclination on the higher side, and after that the decline begins, and only during 3 initial hours we want to execute the trade. And additional requirement on the price formation would be that in recent time, in recent last few hours, some sort of correction should have also happened. So we need the Butterworth line to have been crossed, and again the price action starts to dip below that. So this is not the kind of setup. I think to find the example I will have to go back in time somewhere like this. So when we have recent turnaround and after that the price again climbs higher, compared to this Butterworth output, but after some time it reverses the course. So what we need is the last 15-minute candle to have closed lower compared to the Butterworth output, and the penultimate candle should have closed on the higher side. So that will mean that just recently minor correction has also happened, and now the price action is also reversing course and starting to decline on the lower side. So that will provide us good enough opportunity to go short. So these are the simple conditions which need to be fulfilled for execution of the sell trade. So we start the day, and since we don't really have to use any calculation, we will straight away start by adding the if blocks. And since we want the setup to be symmetrical, the number of if blocks on the sell side will be equal to the number of if blocks on the buy side. We have used 7, so for the sell side the number of if blocks will be the same. So let us bring it in. 1, 2, and 7. After that, the trade block, trade command block. Okay. Butterworth output of last 4 hours should be lower. So we need Butterworth 17 to be less than Butterworth 21. First input less than second input. And after that, we need to look at the price action on the lower time frame of 15 minutes, and where the conditions, as I have explained to you on the JForex chart, we need the last 15 minutes Butterworth output, which is Butterworth 22nd, to be less than the output 3 hours back. So we have this block with the lookback period of 12. First input less than second input, and this output should have been higher compared to the output 4 hours back. So we need Butterworth 23rd to be greater than Butterworth 24. First input greater than second input. Okay, so we have defined these 3 blocks to set the conditions for the Butterworth. After that, we have to see the price action, and here also we have to consider the Butterworth 22nd as our second input. So I'm going to use this line, which is going to be compared with the closing values of the last 15-minute candle and the penultimate 15-minute candle. So we need to compare the closing values of candle 25 and candle 26. It should be lower, first input less than second input. This is the last 15-minute candle, and the penultimate one, which is candle 26, it should have closed higher. First input greater than second input. We have defined There's requirements involving the price action. Now we will be going for the execution as and when we see the price dropping below the closing value of last 15-minute candle. So we have to compare the closing values of candle 27 and candle 28 with the candle 26 close. Candle 27 has a low buy period of 1, so we need it to have closed lower, first input less than second input, and candle 28 should have closed higher. So in this case, first input greater than second input. We have defined these conditions. Now we have to define the parameters for the trade command block. Prior to defining these values, I will place these blocks where all this belongs. Okay. Now coming to the parameters of open at market. The trade amount is going to be 0.1 million. The page will be 2 pips. Stop loss and take profit combination is going to be the same as buy side. This is going to be a sell order, not buy. Buy side we have already defined, so let us take it lower. Okay, this was buy and this is sell. As I had explained to you in yesterday's session, the combination is going to be of 10 pips and take profit is going to be 20 pips, which will give us the risk reward ratio of 1:2. We had observed the chart and given the current volatility. I think this combination for a time frame of 15 minutes is good enough. Of course, the volatility keeps changing time to time, so we have to keep in mind and keep adjusting these values, or you can do it differently. You can take ATR and make the stop loss and take profit dynamic. So that is also one of the options available. With this, our algorithm is fully complete now. Let me color code it to check whether trade iteration flow is going till the very end, and it is. This is the algorithm using the Butterworth indicator. Whenever you want to design and develop, you can also do the test run. So I would suggest that to check its profitability, its efficiency, you should carry out the test run on the historical data on the JForex platform. All you have to do is export this file in Java format and import the same file there on the JForex platform, and you can do the testing. That will give you idea whether the underlying logic is profitable or not. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section. You can also check out the Dukascopy Analytics page for further coverage of the market developments. And to start trading, the JForex platform can be utilized. It's pretty easy to use. And if any assistance is required, you can write to me in the feedback section. We are also available on the Facebook. You can follow our Facebook page. Thank you all for joining in. See you next time. Till then, goodbye.